Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today, we're diving into the EA Series Trust, specifically looking at the Intelligent Livermore ETF, and trust me, it's more exciting than it sounds because we're gonna see if AI is actually making money or just making headlines. This report is a snapshot of how the Intelligent Livermore ETF, ticker symbol LIVR, has performed in its first few months, from mid-September of last year through the end of last year. This fund is interesting because it uses artificial intelligence to pick stocks. The fund is managed by empowered funds with investment advice from Intelligent Alpha, LLC. The big question is, can an AI-driven fund actually deliver? Let's dig into the numbers and see what's what. First, let's talk about costs because that's the first thing everyone wants to know. For every $10,000 you invested in this fund, it cost about $20 to run it during this period. That's roughly 0.69%, which is the expense ratio. It tells you how much of your money goes towards running the fund rather than directly into investments. Now let's look at how active the fund has been. The portfolio turnover rate shows how often the fund buys and sells its investments. This fund has a high turnover rate of around 81%. That means the fund is constantly changing its investments, potentially seeking better opportunities or reacting to market shifts. High turnover can lead to higher transaction costs, so it's something to watch. The fund holds about 68 different investments. It's important to know where the fund's money is invested, so let's talk about sectors and holdings. Information technology is the biggest sector, making up over a third of the fund's investments. This means the fund is betting big on tech companies. Other important sectors include communication services, energy, industrials, and financials. This shows the fund is diversified or spread across multiple areas of the economy, but with a strong focus on technology. NVIDIA, the chip and AI powerhouse, is the fund's top holding, comprising roughly 5% of the fund's total assets. You'll see names like Schlumberger, GE Vernova, and First Solar among the top 10. This tells us the fund is focused on some hot areas like AI, energy, and technology. Now let's get into the nitty-gritty of the investments themselves. This is where the fund puts its money, so we gotta check the list. Looking at the schedule of investments as of the end of last year, you see a wide range of stocks. There's Clear Channel Outdoor Holdings, Grupo Aeroportuario del Pacifico, which is an airport operator, and tech companies like Agilices. It is a mix of different sectors and company sizes, which is expected for a fund trying to capture broad market opportunities. Some of the holdings are names you might not know as well, like Collegium Pharmaceutical or Axcelis Technologies. Also, you'll notice that some holdings are marked as non-income producing. This generally refers to securities that don't pay regular dividends or interest. The fund is aiming for growth, not necessarily immediate income. Let's look at the overall financial picture. The fund had total net assets of around $17.8 million at the end of last year. That's the value of everything the fund owns, minus what it owes. To get that number, we start with the value of investments, add things like dividends and interest owed to the fund, then subtract what the fund owes to its advisor and others. For the period since the fund started, it saw a net decrease in net assets from operations of roughly $1.5 million. In other words, the fund lost money overall from its investments and expenses. This loss is due to the fund's realized and unrealized losses on investments, which outweighed the net investment income it earned. This is a key metric because it shows whether the fund's investment strategy is paying off or not. The fund also had significant activity in terms of shares being created and redeemed. There were subscriptions or purchases of shares worth over $30 million, but there were also redemptions or sales of shares worth around $10.8 million. The end result was that there were 740,000 shares in total issued. The financial highlights give us more detail on how the fund performed on a per-share basis. The net asset value or NAV per share started at $25.06 but ended at $24.14. This represents the fund's total return, which was a loss of 0.49% during this initial period. It includes the net investment income, realized and unrealized gains and losses, and distributions. This percentage shows how much an investment in the fund grew or shrank during the period. The fund's expense ratio was about 0.69%, and the portfolio turnover rate was 81%. We already discussed these metrics, so let's move on. The report also includes notes on the fund's accounting policies. They discuss how the fund values its investments, handles foreign currencies, and deals with taxes. The fund uses a standard hierarchy to classify the fair value of its investments. Level 1 are based on quoted prices in active markets, Level 2 are based on observable inputs other than quoted prices, and Level 3 are based on unobservable inputs. As of the end of last year, all of the fund's investments were classified as Level 1, meaning they were valued using readily available market prices. The investment advisory fee is paid to Empowered Funds, the advisor, and it's calculated as an annual rate of 0.69% of the fund's average daily net assets. The advisor also pays a fee to Intelligent Alpha, the sub-advisor, for its services. The fund may lend securities to generate additional income. The report describes the conditions under which securities lending can occur, including collateral requirements and the fund's right to recall the securities. However, during this period, the fund had not loaned any securities. The fund made significant purchases and sales of securities during the period, excluding short-term investments. It also had in-kind transactions associated with creations and redemptions, which involve exchanging securities rather than cash. The fund made distributions to shareholders during the period, which were classified as ordinary income for tax purposes. Finally, the report states that management has evaluated events after the reporting period and found nothing that would materially impact the financial statements. Alright, so what's the story here? A brand new fund using AI to pick stocks that in its initial period lost money. Is it time to panic? Probably not. This is a very short snapshot of a fund in its early stages. Here's my take. The fund's focus on technology is a double-edged sword. Tech can offer high growth, but it's also volatile. That high turnover rate could be a sign that the AI is still learning the ropes, constantly adjusting its strategy. Whether that's good or bad is still up in the air. AI-driven investing is still relatively new, so there's a lot of hype and uncertainty. The initial loss isn't great, but it's also not necessarily a disaster. New funds often take time to find their footing. Investors need to consider whether they believe in the long-term potential of AI in investing and whether they're comfortable with the risks involved. Ultimately, the Intelligent Livermore ETF is a high-risk, high-reward play. It's not for the faint of heart, but it could be an interesting option for investors who are bullish on AI and willing to ride out the ups and downs. What do you think? Is AI the future of investing or just another Wall Street fad? Let me know in the comments below. And if you enjoyed this corporate decoding, be sure to like, subscribe, and hit that notification bell for more deep dives into the world of business. Thanks for watching.